Hi, my name is Darren from HTJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of speaking with George. George, can you please introduce yourself?
Thank you, Darren. My name is George Dimov. I'm a certified public accountant, and I have a team of 14 senior professionals. And what we do is the same type of thing: demystify taxes as much as possible, and with a focus in international and typically complex situations.
Fantastic.
Now, we're at a time where I'm thinking of how to phrase this. Quite a number of people are looking at leaving the US and perhaps settling in other jurisdictions, or if not, at least acquiring a Plan B option. And I spend a lot of time speaking to people in the investment migration space. So people who offer passports from, I think, 5 Caribbean jurisdictions that offer them, offer residency permits in Latin America or parts of Europe or in Asia. And they say that business is booming and the US is one of the biggest source markets. In that context, do you get involved in pre-emigration planning as people leave the US? And if so, what words of advice do you have to offer?
That's a great question, and I've seen the same trend. And I smiled a little because I saw how you carefully phrased that. With what's the reason why so many people all of a sudden are leaving? And we saw this trend some time ago. One can say that things maybe in the United States have gotten more difficult. One can say that people that have money are overly burdened with compliance. There could be many reasons. I haven't taken a look at the reason, but that's really interesting how you said that, and it made me think. I haven't analyzed the reason why they could all be leaving. I mean, I hear many things, and one of them is very common is people. It's just simply an aging population. You have the baby boomers that are looking for relaxed, inexpensive places to live that don't have overly complex compliance burdens. And and I saw on one of your other shows, I believe it was on Portugal, but we've seen, I mean, of course, Portugal is the real bandwagon of Americans right now. Okay. But before that, it used to be in Central America. Okay. There was many people that were leaving to Belize. There were many people leaving to Costa Rica. But now we've seen a lot of Spain and Portugal. So I'm sure you've noticed the same trend, and I even saw it in your show. So some of the things to plan. And one other point here, a lot of the people that we're seeing leave, okay, they're planning for exit tax. Now, it's not so many Americans that are looking to give up their US citizenship, although we have seen that in the past. Americans get married to a spouse from New Zealand, they move there and eventually give up their US citizenship. I've seen that happen. Okay. But the majority of these people that are doing what's called exit tax planning are people on a green card that have built a career here, maybe built a family, maybe own a home, maybe own shares the company they work for or own a business, and they're looking to leave the United States permanently, okay, and leave it on good terms. And they'll even make comments. They say, yeah, I had some great years here, and I don't intend to just say, forget this nation altogether. I just would like to live somewhere else and not be subject to United States tax laws. And some of them have very positive things to say about the US, where they say, I'm happy to come back every year on vacation. And many of them are leaving the countries where the visa process to come back to the US for tourist visa purposes, or to even just come back, are not very difficult. So I've seen a lot of that. I've seen many go back to Australia. It's a specific country that I've seen. And typically what happens is these people are on just one comment here. The Americans that are leaving to places like Portugal or Spain, remember, if you're still considered a United States citizen or a US tax resident, such as a green card holder on permanent residency status, you do have to report all your foreign income, okay, and your foreign accounts and things like that on the US side. And I know you've covered this on your other shows, but just in case there's somebody new watching the show, or somebody that is not sure about this, that's a United States citizen or green card holder, please remember that just because you leave the United States to go live somewhere doesn't make you exempt from having to report your income. Now, there's ways to exclude your income. We'll cover that. I believe it's the next question, or related to the next question. But for now, I'll leave it at that. Now, for the ones that are green card holders, it's very important to know that if you're considered what's called a covered expatriate, okay, covered expatriate means in the last 8 of the last 15 years, if 8 of them you're living in the United States, okay, there's other thresholds, and you have a net worth of over 2 million, or your tax liability is $200,000 or more over the last 5 years, or you do not properly file your returns in the last 5 years in the United States, you could be considered what's called a covered expatriate, in which case you're actually taxed what's called an exit tax. Okay, an exit tax means that you're being taxed on what's called mark-to-market valuation of your assets. And the premise here is the whole point of this is that the United States wants to protect itself from a situation where somebody comes here, builds a career. Let's say they end up with property worth, tens of millions of dollars, and then somehow they find a way to sell it, and the IRS never got their share of what your capital gains are. So they want that ahead of time to prevent this situation. And you'll see it, and I believe on one of your other shows, you even went into it on real estate. If you have foreigners that own real estate in the United States, there's a system from the IRS set up for that as well. If the person's a non-U.S. person, you have something called a FERPA withholding when you sell your U.S. property. So it has some similarities with this, and it really is just to protect the U.S. from a situation where somebody doesn't pay tax. You see the same thing with foreign owners of United States business shares or partnership. That partnership is required to have a withholding for money that's leaving in case that foreign owner never files their United States 1040 NR or non-resident return. So that's a little bit about the basics and what we've seen. But and I'll go at the end of the show. I have some questions for you too, because I want to hear a little bit about what you've been seeing too.
Okay, absolutely. Thank you.
George, if someone wants to get in touch with you, what's the best way to do that?
My website is a great way. You can go on our website, which is Dimov Tax. It's my last name. That's EIMOV tax.com. Or you can send an email directly at info@dimovtax.com. Those are two great ways to get in touch with us. We also have a phone number. You can also call us. And the best phone number is 833-829-1120. That's +1 833-829-1120.
Fantastic. Thank you.